Hi, I'm Vincent Arcuri. If you were to invest in real estate and I was going to show you a surefire way to never lose money investing in real estate, would you invest? Stay tuned. I'm going to show you a way that you can never lose money by investing in real estate. Stay tuned. Hi, I'm Vincent Arcuri of Better Homes and Gardens, Ellie Associates, an almost 30-year veteran of the real estate industry here in the Tampa Bay area. I wanted to talk with you a little bit about investing because what I'm seeing on social media is a lot of real estate agents who have never been through the ebbs and flows of a real estate market suddenly, because they have a YouTube channel or they have Facebook or they have Instagram or Twitter, they're suddenly telling everybody about the doom and gloom of the real estate market because of the current pandemic that we're in. I even see these gurus popping up with how to become a foreclosure, how to become an REO, real estate owned, how to represent banks, how to conduct a short sale, because they're all so certain that the real estate market is going to implode. I don't think that's going to happen. I'm a fan of investing in real estate, and I want to tell you a sure way to never lose money in the real estate market, and that's never to panic. I want to give you an example of a person who bought a home in 2005, in the summer of 2005. Now, if you go back, that's historically considered the absolute worst time in the history of America to buy a piece of real estate, at least in the modern era. So if you purchased a home in 2005 for $500,000, for example, in the summer, as aforementioned, that's the peak of the market. What if you wouldn't have panicked and you wouldn't have done what all the sheep were doing, which the sheep is the common everyday American that sees, oh, my neighbor's doing a short sale, I'm going to do a short sale. My neighbor went into foreclosure, so it's okay. My neighbor moved out and has a tenant moving in, so let me make some quick short money and I'll just rent the house out until the bank forecloses, because that's what happened during that time at around 2008. During 2008, after everybody was so lavishly boasting of being a real estate investor, a flipper during those great times, suddenly everybody was following each other off the cliff as they were bailing out on all of their real estate inventory. But what did the smart people do? The smart people were buying real estate in 2008. I know, because in 2008, I was the #1 ERA agent in the world, mostly from my investors who were very real estate savvy, jumping into the market, going against the grain. Now, you take that person that bought the home for $500,000 in 2005. You remember I was talking about that at the beginning of the video? That person bought that home. The interest rate at that time was 5.7%. If you were savvy and you weren't doing the subprime loans with the adjustable rates and you just settled on a 30-year long-term mortgage, your payment was about $2,900 a month. Now, that was principal and interest. Now, look at yourself today, and you're halfway through that mortgage, and you probably still owe around $343,000 on your home. But today, that home is worth about $650,000. So you have a huge equity share in the property. And not only that, if you've been asleep at the wheel and you just now decided to refinance the balance of that mortgage, you're going to lower your payments by $7,500 a month, because you're going to be at a 15-year mortgage at today's rates that are about 2.4 for a 15%. So I can make a case that that person that bought a home at the absolute worst time in history has a pretty good equity position today by being responsible, staying in the home, and continuing to make their payments. Now, if you were one of the people who did a 15-year mortgage back then, your home's paid for. You bought a $500,000 home that's now worth $650,000, so you have a net worth of $650,000 more because you invested in real estate and didn't panic. You know, you can buy a home with zero money down. I know you cannot buy stock with zero money down. And I always look at the stock market as an example. And I look at Enron, for example. Enron was the 7th largest company that was traded on Wall Street in 2001. At one point in 2001, 2000, their stock was selling at about $95 a share, and the following year it was worth absolutely nothing. Had you purchased a home in Tampa during that time, and let's say you invested $200,000 in a home in 2001, that home today is probably pushing in the low to mid $500,000 price point. So once again, by not panicking and staying with your investment, it's not an overnight. Real estate is a long-term investment. If you're looking to make a quick buck, a first down, if you will, which was most of these amateur investors are trying to do, is just make a quick buck, a quick flip. But if you're going for a touchdown, you stay with real estate long term. You show me any point in history where real estate, at the worst point in history, if you purchase real estate, show me where it has not come back. So when's a great time to buy real estate? Yesterday. If you're looking to invest, to start or add to an investment portfolio, give me a call at 813-VINCENT, 813-846-2368. Thanks for watching.